Dr. Mohan, thank you very much for joining us, sir. Can you explain how this 56,000 crore was arrived at?
Well, I won't comment on the number because that is something that because I don't have the 2018-19 RBI accounts.
Okay.
Therefore, I have no. I really cannot comment on the exact numbers. But I think that if you need any,
explain your formula, sir.
Yeah. Well, so I think that as the RBI I think the press release has given a pretty good description of the basic recommendations of the committee. If I can first give a broader background, if you would like.
Yes, sir, please.
First, a much broader
touch
background.
The revaluation. So first of all, you have not touched the revaluation reserves, correct?
Yeah. So no. So I want to give a broader background actually.
Yes.
So that all of this is put in context. First, the discussion of the general public discussion plus the economic survey that came out a couple of years ago has all been concentrated on the liability side of the balance sheet and focused on risk measurement under different scenarios to measure the adequacy or excess of equity reserves. So the first point I think is that we need to understand the central bank balance sheets are consequences of their policy mandates. They do not determine policy actions. The balance sheet is a consequence of the policy mandate of whatever of each central bank. Second, that the balance sheet has two sides, that is both assets and liabilities. And obviously liabilities have to equal the assets. That's why it's a balance sheet. So one thing you need to understand is that in our case, on the asset side, for the last 10 years, the net foreign assets have varied between 60 and 90% over the last 10 years or so of the balance sheet. Currently, I think it's around 70% of the balance sheet, and the other 30% on the asset side is net domestic assets, essentially government securities. So the first thing, as I said, to understand is that look, whatever assets you have, they have to be balanced on the liability side. So the liabilities have to equal the assets. Now, as it happens, the current foreign assets are around 420 billion odd. Total debt of the country is around 500 billion, and total external liabilities are about $1 trillion. So in that sense, and the total foreign assets of the country are 600 billion, including the net foreign assets of the Reserve Bank. So my point of saying all this is that look, in that sense, in no way can one think of the foreign exchange reserves, the net foreign assets of the Reserve Bank being higher than what they ought to be. Second, on the net domestic assets, as it turns out, the Reserve Bank past year, that is 2018-19, bought almost 70% of total government borrowing, and therefore the second part of the policy mandate of the Reserve Bank of keeping adequate liquidity conditions in the country.
Yeah.
So, as I said, to just summarize, my first point is that we need to understand the composition of any central bank's balance sheet, and I've given you the very, very broad parameters on the asset side of the Reserve Bank. Then coming to the liability side, the revaluation reserves obviously reflect what's their net foreign assets in the foreign exchange reserves, and they're essentially an accounting entity. Therefore, it's important to understand that. They're not realized profits, they're accounting entity, which essentially arise because of the variation of the Indian exchange rate. So when the rupee exchange rate depreciates, Obviously, because the Reserve Bank's balance sheet is in rupees, the size of the foreign exchange reserves goes up, even though there's nothing happening on the size of the reserves. And of course, if the rupee appreciates, the foreign exchange reserves in rupees go down, and therefore the revaluation reserve just goes up and down in reflection of that. It's standard accounting practice that revaluation reserves are never distributed, whether in the central bank or in any other entity. Standard accounting methodology. As it happens, the foreign exchange reserves, if I remember correctly, the revaluation reserves, if I remember correctly, account for something like 65% or something of the balance sheet, of the total liabilities. The other main part, I'm sorry, I misstated that. On the liability side, the monetary liability, that is base money, which is currencies plus bank reserves, account for around 70% of the total. And roughly 30% or a bit less are the non-monetary liabilities, of which around 2/3, that is about 20% or thereabouts, give or take 2 or 3%, are the revaluation reserves. I don't have the exact numbers in front of me because I don't have the 2018-19 Reserve Bank balance sheet, but those are very, very broad numbers. And so what then remains is the other non-monetary liabilities, which are there for other risks. So in some sense, the revaluation reserves essentially account for the market risk that the Reserve Bank faces. And as I said, there's a general accounting principle that you never distribute revaluation reserves. Having said all that,
okay.
You then go into the other parts of the non-monetary liabilities, and what we decided, of course, is that to look at that, we need to look at the various risks that exist in terms of monetary and financial stability, and we came to the conclusion that that should be between 4.5 to 5.5% of the balance sheet, and another 1% for other risks. So that total comes to 5.5 to 6.5%. And therefore, from all of that, what comes out is that we need to always keep the revaluation reserves cannot be distributed. B, you need to keep something between 5.5 and 6.5% of the balance sheet as for other risks, and then therefore, basically, what you then distribute falls out of that. I hope that that's clear enough.
Yes, I think you have tried to explain that, sir. And I just for the benefit of our viewers who might be tuning in at this point in time, I just want to read out from what the RBI press release says, what Dr. Rakesh Mohan was alluding to. It says, while the revised framework technically would allow the Reserve Bank's economic capital levels as on the 30th of June 2019 to lie within the range of 24.5% to 20% of balance sheet, and of course, you said that the revaluation account cannot be touched. The economic capital stands at 23.3% of balance sheet. As financial resilience was within the desired range, the entire net income of 1,23,414 crores for the year 18-19, of which 28,000 crores was already paid as an interim dividend, has been transferred. Dr. Mohan, you didn't want to comment on the exact number, but the fact that according to the Reserve Bank, the economic capital stands at about 23.3% of the balance sheet. For the lay person, do you believe that this gives you enough comfort?
Yes, I think I'm very happy to see that the Reserve Bank Board has essentially accepted all the recommendations of our committee, and from what I see from the press release, that they're just exactly following what we have suggested.
Dr. Mohan, I've just one.
Yes.
Just one doubt, sir. On an average in the last 3 or 4 years, or in fact last 5 years, the Reserve Bank's annual surplus has been something between 50 and 65,000 crore. This year, the Reserve Bank says its surplus is 1.23 lakh crore. That's the annual surplus. It's double the average of the last 5 years. Would it be only because they did a large number of OMOs?
Absolutely. That's obviously the share of the net domestic assets, that is the government securities, has gone up.
Okay.
Because they did a huge amount of OMOs for liquidity purposes. And the interest rate, of course, on domestic securities is much higher than foreign securities.
Okay, so every time
there's no issue there. It is what it is.
So the RBI doing a lot of OMOs gives a double bonanza to the government. First, the RBI buys the bonds, so they get a very good yield, and then they get a good dividend.
No, Latha, I think that this is a completely wrong way of looking at it in terms of bonanza or otherwise.
Okay.
I hope that the Reserve Bank is deciding to publish the full report because it's important to understand the principles. I felt that.
I was not referring to your report. I'm only saying that in the last 1 year, the Reserve Bank did a lot of OMOs, and that has benefited the government with a larger dividend.
Yeah, but you see, again, as I said earlier, you have to look at the policy mandate of the RBI, not what happened in 2018-19.
Okay.
There was almost zero or slightly negative net foreign inflow, net foreign capital inflow. And another point that you need to understand is that over the past 10 years, the Reserve Bank balance sheet, in correspondence with base money, has been increasing at roughly the size at the nominal increase in GDP, which has been around 10% or thereabouts, plus minus. And therefore, every year, the Reserve Bank balance sheet has to increase by around 10% of its size. And as it happens, the Reserve Bank balance sheet is around 20% of GDP. So that means it needs to increase by about 2% of GDP every year. So when you don't have net foreign inflows, then obviously net domestic assets have to rise. So as I said, it is very important, particularly for your channel, which is what many financial people watch, to not concentrate on this business of bonanza, etc., to concentrate and make people understand what any central bank's balance sheet is supposed to do. It's a consequence of its policy mandate. In our case, management of external risks through keeping an adequate stock of foreign exchange reserves. And second, for monetary policy purposes, you need to use OMOs, etc., for monetary policy purposes. And third, for liquidity purposes. And that's exactly what the Reserve Bank has been doing. And if whatever the consequence of that on the balance sheet and distribution to the government, so be it. In the US also, by the way.
Just to take that point, to take that point forward, Dr. Mohan, and again, for the benefit of our viewers who might be tuning in, I just want to lay out the math for everyone because this is a complicated issue. Now, the budget estimate was 90,000 crores for FY20 in terms of the dividend from the Reserve Bank of India, and what the government will now get is 1.48 lakh crore rupees. This will also include the excess capital. The government received 58,000 crore rupees as RBI surplus last fiscal, and what we are given to understand is that this business of interim dividend, this practice of handing out an interim dividend may be discontinued. But Dr. Mohan, just going back to the point that you were making, that this is an important issue that needs to be looked at from the policy mandate of the Reserve Bank of India and hence its action as well as its balance sheet. Do you believe the fact that they have now accepted the recommendations of the Jalan Committee, of which you are a member, this puts in place the guardrails, puts in place the checks and balances against what people were seeing as the government being able to tap in, quote-unquote, for a bonanza from the Reserve Bank of India?
Yeah, no, that's. I think you put it just about right, that what we have emphasized from the committee report are the principles on which the Reserve Bank's capital ought to be looked at, which I described very, very briefly, and I think is well described in the press release. And second, also how the surplus should be distributed. So the point is that suppose the a surplus in some year is not like it was this past year. That suppose we get large foreign inflows next year, and therefore the proportion of domestic securities comes down, the income will come down, the interest income will come down. And so as long as the Reserve Bank and the government put together through the Reserve Bank board follow the principle of keeping the percentage of economic capital at between 5.5% to 6.5%, that's what will determine the surplus distribution. Keeping in mind, of course, that the balance sheet has to expand by around 10% a year. So this means that the economic capital will have to expand by something of similar order, 10% a year, something of that order. And so as long as those principles are satisfied, I think that we will be in a very good shape. And if I may add that I do believe that our report will be seen, assuming it is released, will be seen internationally as one of the best examinations of this subject. Because as it happens, there are really no standards on this issue. We looked at the international experience very carefully. I looked at many balance sheets personally, and there really are no standards across the world. So, and I hope that we will be helping across the world in establishing certain principles on which central bank balance sheets can be looked at.
Well, we will wait to see the details of the report. So what we have today is only the press release that's been put out by the Reserve Bank of India. But Dr. Mohan, since we have you, and this has been a process that has gone on for longer than the government anticipated and perhaps the committee itself expected. There have been several sort of extensions that have been granted to the Jalan Committee to come up with its recommendations, which were very recently submitted to the Reserve Bank of India and taken up by the board today. We are given to understand that there were points of disagreement, difference, dissent even, especially from the government nominee on the committee. I would imagine that those points of difference were then resolved with the change of the government representative?
Shereen, I won't comment on that except to say in Hindi, Der aaye durust aaye.
Der aaye durust aaye. I mean, that's a fairly loaded statement, Dr. Mohan. What would you mean by that?
I think that this was a matter of great importance for the financial stability of the country, for the Reserve Bank, for the government of India. And therefore, I think that even if it took a few more months more than expected to arrive at an absolutely unanimous report, which is totally acceptable to both the government and Reserve Bank, is something I think that we can be very proud of. And I'm very happy that the Reserve Bank board, which has two representatives of government, although they're non-voting on the board, has accepted a report in toto according to the Reserve Bank press release.
So should we Dr. Mohan, there was no dissent note for the in the Jalan Committee recommendations?
There's no dissent note in the Jalan Committee report.
Okay. All right. That certainly...
in the final report.
Okay, in the final report. There was dissent earlier, but the dissenting member...
I won't comment on that. I can only comment on the final report.
Okay. Well, back to you, Shereen. I think, it's very important. And also, I guess it's very important that this entire debate on the Reserve Bank's reserves and how it should be calculated has been finally laid to rest. We now have a reliable calculation which has been vetted by a very eminent panel, accepted by the government, accepted by the RBI board. So at least the debate has ended, would you say, Dr. Mohan?
Well, I hope so. And as I said, what's more important than the actual numbers of surplus distribution are really the principles on which the central bank balance sheet should be looked at.
Okay.
And I'll just repeat in a few sentences. One, you must look at the central bank balance sheet as a consequence of its policy mandate. Two, you need to make sure for financial stability purposes that there is adequate resources to meet foreseeable risks. And therefore, I think that we've addressed both those concerns. And I feel quite satisfied that that we arrived at very defensible principles and provide a result which has been accepted both by the government and the Reserve Bank after a great degree of contentious debate over the last year and a half.
Yes.